recording. Welcome, Sandy. Would you like to take us through the discussion on R&D tax relief?
Thanks for the introduction there, Gordon, and welcome everybody. Thanks for giving me some time this morning. I'm Sandy Findlay, Partnership Director with ABGi UK. The one slide I forgot to put in today was my sales pitch. We are an international consulting group. We work across 28 countries. We have 200 specialists and we manage $1.6 billion worth of incentives annually. What we're really about now is helping clients accelerate their innovation activity by helping them secure appropriate forms of funding. That will be grant funding in the UK through Innovate UK, Horizon Europe, and some of the more sector-specific funds. Tax incentives, so R&D tax relief, patent box, capital allowances, and where it's appropriate, we actually have a number of partners who do unusual forms of debt. So we have a number of lenders who will lend secured against intellectual property valuations. We have clients, lenders who will lend against recurring revenue streams. All of the funding is attached to one form or other of an output from innovation activities. So that's who we are, that's what we do. Gordon and Matt asked me today if I could talk about, do an update on R&D tax relief and patent box. So here we go. I thought it'd be worthwhile starting with the slides on the recent figures, stats that were produced by HMRC, just so we can get a feel for where the R&D tax relief scheme is.
So not very reliable stats.
Well, yeah,
we think they're accurate. Okay.
Are they accurate? No, I think what I tend to look for in the stats, Gordon, is more the trends that are coming out. I think there's some interesting things come out of them, but we tend to find they publish these stats usually in the autumn. So these ones came out, I think, 3 weeks ago. They're usually out in September. They change significantly between autumn and what they publish in February or March. So it's more to do with the trends that I'm interested in, really. So one of the things that sort of comes out for me is this is now a really mature scheme. So 86,000 claims in the UK. It's up 16% last year. Almost all of that growth is coming from the smaller end of the SME market, as far as we can see. The really significant thing is that the value of the scheme now is up to 7.4 billion annually. For us, that's raising a number of issues. The R&D tax relief budget is now significant enough to be of interest and to be important to members of parliament. So there's now a lot more questions around the R&D tax relief scheme. So is it delivering value for money? Is it actually doing what it was set up to do, which is to increase the spend of UK companies on R&D in proportion to GDP? I think the target the British government's got is 2.4% of GDP by 2027. Well, it's currently sitting at 1.8 just now. So they're going to have to see more than a 1 point increase annually if they want to reach 2.4% by 2027. There is increasing attention being given to the scheme, particularly trying to tighten up loopholes and opportunities for misuse. I'll go into a few of them in the next slide. We had a consultation announced in March in the last budget. It closed in June. No report come out of it yet, but we are getting some indicators. Well, I work with a lot of trade associations in the UK, and I know what the trade associations have been saying to Treasury, and we also know what the other major providers in the UK have been saying to Treasury as well. So we've got some ideas on what might come out of that.
These are big figures, Andy. That I think everybody on the screen can do the math. There must be some sizable claims in amongst there that for companies are able to access.
Oh yeah, we've got one client in Scotland. I'm not allowed to name them, but they're their eligible spend annually is something like £12 million. Now, if their eligible spend is 12 million, even under the RDEC scheme, they're getting £1 million back. It's not unusual to have larger companies, large end of the SME or RDEC companies claiming over £1 million a year benefit. But the significant proportion of them, if you look on the right-hand side of that slide there, 17% of all claims get less than £5,000 benefit. And then 72% have an eligible spend of around 50 or less than 50K. That means of that 72%, the biggest claims are getting 12,500 a year. Okay. Now, I can't do the maths on the latest release of figures because they don't split it down into enough detail for us. But the last time I saw detailed figures from HMRC, I think the RDEC market was equal to 35%. It was 35% in the number of claims, but it was 63% in the value of claims. So the large companies take the biggest proportion of benefit, as you would expect. There's a lot of companies out there making small claims, though. And we're actually seeing that the average value of a claim in the SME side of the market declining. It's just the way it is. So if you look at that middle sector there, 25% increase in the number of first-time claimants in 2019, 2020, and the drive or the increase in terms of the value isn't particularly significant. So claims are...
Is it still the case then that if clients got an R&D claim in 1 year, there's a good chance they've got it in year 2 and 3, and that clients tend to stay with you and make claim?
Yeah, there is more fluidity in the market. We, the bulk of our revenues come from clients that have been with us more than 3 years, renewal clients, as we describe them. We've got some clients that have been with us now 12 years. And actually, some of them have come to us and said, we know we can get better rates in the market, but we're comfortable with you guys and you do a good job.
Sure.
But the companies who do move around are the ones who are moving around for a couple of extra % reduction in their contingent fees. That's really where it's come from. The market is a lot more fluid now. So we're seeing more clients moving from one provider to another, moving from us to one of the other big competitors, or coming from a competitor to us to get a reduction in their fees. That's really what it is.
We'll move on to HMRC's interest and why they might, the clients might be better staying with you. But the point being that if a client makes a claim in 1 year, they've probably got a claim in more than 1 year.
We tend to find that the vast majority, the clients we work with are the ones that are doing R&D repetitively. So every year they've got a claim. What we do find is that the value of their benefit can rise and fall quite dramatically, because a project might last 18 months and there's 3 months, there's kind of shoulder months in the previous accounting year and the following accounting year. The bulk of it comes in 1 year.
Understood.
There aren't many clients who do one project and then that's the end of it. And I think also because we go in and do, if a client's never claimed before, we go in and do a retrospective view over the last 2 financial years. And then even if they come back to us and say, we haven't actually done anything this year, we looked at this year's accounts, we don't want to make a claim. Our analyst will usually have an hour and a half call with the techies, just again to make sure it's that belt and braces thing. We'd rather spend an hour and a half on the phone with the client and be able to say, yeah, we agree with you, there's no claim there, than miss something and 2 years later somebody says, oh, if we'd seen that, you could have had £5,000 or £10,000 tax relief on that. So not many clients make one claim and then walk away from it. It does happen, but most clients will find that their claim will be a repetitive thing year on year. Some years will give them better benefit than others. That's kind of how we see it, Gordon.
Yep. Okay. Understood.
Good. Next slide, Gordon.
Matt, are you able to take us on the next slide? There we go.
That's great. Good. Excellent. Now I'm just going to slip into my own one so I can see my notes here. We are seeing more attention given to the scheme annually at budget time. Mm-hmm. So in the spring budget this year, there was the consultation announced. That closed in June. We haven't seen a formal report yet, but a number of the trade associations were pushing for greater scope to claim R&D tax relief against capital investment for R&D purposes. We're not sure of the value of that. We think that's more about changing the capital allowances structure. We think our experience is there are very few capital investments that are purely R&D. So we normally look at companies who have bought a piece of equipment which is partially used for R&D rather than fully given over to R&D. We know there are companies out there that do have investments that are purely R&D. We think they're in the minority, but a lot of the trade associations are pushing for greater flexibility in claiming capital allowances for R&D purposes. And there's been a recent report by the M5. You're going to ask who they are. That's ADS, the Society for Motor Manufacturers, the British Pharmaceuticals Industry, the British Chemicals Industry, and there's one other in there that I just can't remember for the moment. They've published a report again stressing that UK manufacturers need greater incentives to encourage them to make capital investment. There's also been a wide-ranging call for enhancing the relief rates for the SME scheme, because what we found in the last 3 years is that the RDEC scheme has successfully been increased, the rate of relief for it. The SME scheme hasn't. And there's also been some calls about allowing relief for new areas, and I'll go into that in a minute. The autumn budget has seen an end to relief on spend outside the UK. As far as I'm aware, that takes effect. I'm just checking that I've got it right. Yeah, as far as I'm aware, that takes effect from March next year. So we actually understand where they're coming from. Companies shouldn't necessarily be claiming tax relief on R&D spend that's happening in other markets. It's just another one of those loopholes. It's like the move to put a cap on the amount of cash credits that companies can receive. If it's capped at 3 times their PAYE liability for the year they claim for. Again, we had a number of instances where companies were setting up registered companies in the UK, spending all their money abroad and then claiming the cash back in the UK, not necessarily helping the UK economy. Yep. The other thing is that as part of this response to companies asking for a wider range of eligible spend, the government is, with immediate effect, going to allow companies to claim costs on cloud computing and data service costs. This is really a bit about the whole modernising manufacturing thing and big data. So a lot of larger manufacturers find that big data actually allows them to do things like control maintenance, to predict when machines are going to fall over, or they use it for prototyping and digital simulation. And previously, if they contracted those services out to a cloud hosting company, some of them found it problematic to get the costs relieved in their R&D claim. We didn't have a problem with it. It will have no material effect on any of the clients we're claiming for. If they've been spending money on cloud computing in the past, we've been able to make claims on it. The other things that are worth talking about is in the last year and a half, we've seen an increasing incidence in the number of inquiries. For ourselves, we normally deal with 3 to 4 inquiries a year. The last time I checked with our ops director a month ago, she had 14 active inquiries on her book.
From HMRC?
Yeah. We believe the number of inquiries has gone up about 4 or 5 times in the last 18 months. A couple of things causing that. One is that HMRC are now rotating assessors around the various departments, and that includes the R&D department. So we're getting more assessors who have no previous experience of the R&D tax relief scheme, and they're raising claims for things that in the past would have been waved through. So that is an issue for us. In the spring budget, Treasury also announced an increase in HMRC's salary budget to allow for the employment of 1,000 new assessors specifically for R&D. This is part of this whole thing about it's now a £7.5 billion budget a year. We need to control it and police it better.
Yeah.
So there are more assessors around. One of the problems we've had is that that 4 or 5-fold increase in inquiries, they're often for really spurious reasons. You know, it's more because the assessor looking at it has no previous experience of R&D claims. The paperwork's maybe not quite 100% right. And what we would say is that there's a general tightening up on the administration of the scheme. So increase in focus on companies providing adequate and appropriate documentation. The documentation needs to be as HMRC dictates in its guidance notes. I'll go into that in a minute in the next slide. Strict interpretation around eligible spend, and particularly subcontracting. For some reason, they've got subcontracting in their minds. They've got a bee in their bonnet about that, and it is creating particular problems. Next slide, Gordon.
2 seconds.
Yeah, no worries. That's great, good. Okay, what it does mean for us is we think that providers in general, whether an accountant's doing the claim for the client themselves, whether they're coming to a specialist like ourselves, they need to be much clearer and more concise in supporting documents. So you need a technical report. We've heard that, not us, because we put a report in for even the smallest claim we work on. It's something we've always done. But we know there are some providers out there who were a bit more lax and didn't necessarily put claims in, or reused old claims and submitted maybe a claim from last year for this year's claim. And HMRC are getting much tighter on picking up on issues or picking up on inaccuracies around that claim. So what we'd say is, when you submit a claim, what's the field of science or technology the client's working in? That has to be clearly defined. What advance was being sought? What were the technical challenges that raised, or the technical uncertainties, as HMRC call them? How did you address those technical uncertainties? What was the work package that you put in place to address or resolve that uncertainty? And who did that work? They're getting much tighter on competent professionals. The good news is that those competent professionals, according to a ruling recently on a tribunal 6 months ago, according to HMRC themselves, they don't require the competent professional to work for the company making the claim. So you could bring in a contractor for 6 months or 9 months to oversee the project. However, if there is ever an inquiry on that particular claim, HMRC would expect that competent professional to be available to address the inquiry. So if you're using a contractor, there has to be an agreement there that if there's ever a future inquiry, the competent professional, the contractor, will be available to answer questions from HMRC. Okay. So more accurate tracking and reporting on cost allocation. So they are now spending, we always found they were quite happy to accept our justifications, our rationale for the cost allocation. This increasing number of assessors that are available to them means that they will come back and question that from time to time now. So, you know, again, if you're going to put a claim in, make sure you've got the evidence and the rationale to support that. Because if you don't have it and there is an inquiry, it just puts you in a wrong foot, and it makes it more difficult for you to win that inquiry at a later date.
Yeah. Be prepared for greater scrutiny.
Definitely. And be much more sure on the contractual relationships between your company and their subcontractors as well. So we have seen a lot of kickback recently on subcontracting. Our position on this has always been, and still is, that we take a case-by-case approach. So there's no hard and fast rules that says if you subcontract it out, you can't claim. It is dependent on the contract you have in place. So HMRC say that if the contract stipulates that the company needs to do some R&D, you know, the subcontractor, in order to deliver the service, then it will be the commissioning company's claim, not the contracting company's. However, if it's implicit, if you don't tell the company they have to do R&D, but as a result of fulfilling the contract, they need to provide R&D, that could be the subcontractor's claim. And for us, it comes down to who took the technical risk and who took the financial risk. So if you're paying them an hourly rate for doing the work, the chances are it's the commissioning company who get the claim. If you give them a fixed sum and say, that's how much we're giving you for doing this work, and they incidentally find out they have to go away and do a bit of R&D, we believe it's the subcontractor's claim. But we think we will now get more scrutiny over that going forward. So
makes sense. Yeah.
Yeah, well, it does. You know, we've been arguing for a long time now that the scheme needs more attention and more policing, particularly if they are going to continue the scheme and make it a bigger budget each year. So we're quite happy to have that scrutiny. It's just claiming companies and their agents need to be aware of that, Gordon.
Good.
And last slide, Gordon.
Yeah.
Patent box, again, recent figures 3-4 weeks ago from HMRC. Not a significant change in the patent box regime this year. It grows very slowly. So it's gone up about 100 claims in the last year, if these figures are accurate. The value has gone up about £100 million additional benefit over those 100 claims. HMRC themselves are predicting that the number of claims will fall next year to about 1,350, but they're actually looking for the benefit on patent box to go up to about 1.2 billion next year. So we would anticipate that because patent box, unlike R&D, is based on the profits from the patents. And if companies are actually making commercial headway, then the profit should grow year on year as they're commercializing on particular bits of IP. So that's in line with what we expect. The average benefit on a patent box claim at the moment is about £800,000, we reckon. It's predominantly large companies, so you have something like I think it's we've got there 28% of large companies make the claim, but they get 92% of the benefit. Large companies tend to it's predominantly farmers, we find.
Right.
They have a strong IP patent portfolio and they're actively commercializing it around the world. So they will be the biggest benefactors. If you look at R&D, the average claim value or benefit value is £86,000 a year. But we know that 72% of all R&D claims get less than £12,500. So it is a much more significant benefit for companies if they have patents.
So big pharma is the one that's monetizing their patents.
Yeah, it is predominantly. Our own experience is even we do quite a lot of work in automotive, aerospace, and we find in aerospace and defense, a lot of the larger companies who have patents, can't name them, but they weren't even aware they were allowed to claim patent box. Because they were involved in MOD contracts and they believed because the MOD were paying for the research, they couldn't benefit from it. The reality is if they own the patent, they can still claim the benefit.
Okay.
So it's something to be aware of, and we do think it will become much more significant. If you think of the relative benefit, at the moment the company gets 10% corporation tax rate against the standard rate of 19%. The year after next, the standard corporation tax rate is going to go up to 25%, and you'll still get 10% corporation tax rate on all profits from patents.
From the patent. Very
so
good.
it is significant, and we are actively promoting that to companies now, because even in our own portfolio, we have a number of companies that we know claim R&D tax relief every year. They have patents there, and they don't claim patent box. So we're promoting that to clients now. Interestingly enough, in both schemes, the biggest benefactors tend to be in London and the Southeast. They take generally the lion's share of both R&D tax relief and patent box. Patent box, 48% of the value comes from companies registered in London, and for R&D tax relief, it's 38%. So it's just, most companies are, big companies are registered in London because that's where the accountants are. And I've got 2 minutes left, so I'll talk very briefly about the grants landscape. We're finding increasing competition for the Innovate UK grants, particularly the SMART grant. We regularly get companies coming to us and saying we scored high 80s, 86 to 94 on the assessment, and we still didn't get a grant. SMART grants at the moment are actually oversubscribed 4 to 5 times. So even if you've got a bloody good application, you've got a 1 in 4 chance of getting the money. The ones that are much more important for or much easier for companies to access are the ones that are focused on specific sectors or specific technologies. So at the moment, things like the Energy Transformation Fund for manufacturing, or Clean Fuel, the Clean Fuel for Aviation Fund, those types of things, because they're very specific. Companies should also be aware of things like the National Aerospace Technology Exploitation Programme, which is specifically for aerospace type projects or developments that could have an impact on aerospace in the UK. DASA, which is the Defence and Security Accelerator, grants specifically for defence and security purposes. National Institute for Health Research, which is focused on companies looking to do some research around health benefits or treatments pre-introduction to the NHS. So be aware of those. And one final thing to mention is that both Innovate UK and the Defence and Security Accelerator have recently launched loan funds. Innovate give 250,000 up to 1.6 million pounds over a 4-year period with repayment holidays on request, and it can be used for everything from prototyping up to commercialization. DASA will give I think it's the same, 250,000 to 1.6 million over 7 years for commercialization of defence or security inventions. And you don't have to have been funded through either fund in the initial stages. You can make an application directly for the loan. So it's worth keeping in mind.
Okay, very good.
Companies in the commercialization phase.
Thank you for that. We're bang on time, so not a lot of time for questions. If people do have questions, stick them in the chat box and I'll pass them on to Sandy or email them to me. Really appreciate it, Sandy. Good to see you again. Sandy and I have worked together successfully over a number of years, Armadillo and predecessor, and he's helped a lot of clients to make claims with an expert team behind them to help make those claims. So there'll be a wide range of understanding amongst the members and involvement in R&D. But if you think that you've got clients that may want to look closer at this, get in touch and we'll put you in touch with Sandy. Thanks very much, Sandy, once again.
Thanks for your time, Gordon and Matt. Speak to you again, yeah?
Okay, thanks. All the best.